What's up, guys? How's everybody doing? We'll get started in a minute. I'm just going to turn down the background music a little bit. All right. Welcome back to me. It's been a while. How long has it been, actually? And where did my profile just go? What is going on? That profile literally just disappeared. How do we reset that? Give me 1 second. Some technical difficulties. Give me a quick sound check. Saw that? I think that sometimes happens when the session changes. There we go. And now I lost the levels that I had. All right. Whatever. We'll be okay. We'll be okay. And that is because I think we just closed out the daily. Yeah. All right, guys, what's going on? How's everybody doing? It is 7 p.m. New York time. I haven't done a late stream in a while, but it's good to be back. I've been on a break now for I think going on 2 weeks, right before Christmas. My daughter was born on the 22nd. I think I went live maybe a week before that. I mean, I'm sure you could just look on the YouTube and see exactly when that was. Maybe it was a little bit over a week and a half. I don't know. So yeah, anyway, big changes. I have a little girl. Her name is Addison Grace, and she is she's beautiful and she's wonderful. And being a dad is everything that everyone said it would be, at least so far. I can't LARP and say that I've been doing it for a long time. So I'm sure I have a lot that's in store for me, or there is a lot in store for me, but it's amazing. And for anyone who's ever heard from other people, other parents, yeah, you know, you never love anyone or anything like you'll love your own children. And you hear that, and, you know, you try to comprehend that and, you know, have some kind of frame of reference, whether or not it's, you know, loving your significant other or loving your animals. And you think, well, it's probably a little bit more than that, but it is immeasurably more than anything else. I mean, I can't say that for everybody because there's some shitty parents out there, but it's absolutely, for me, it's indescribable. It's amazing. You know, it was literally a gate that I feel like I walked through the moment that she was born and that I saw her. There was a gate that I walked through in life, and everything before that, everything after that is separated. The great filter of all things that matter and all things that don't in an instant. So there's obviously a lot of positives that can come from something like that. Gives you more perspective, aligns your goals, aligns your purpose, yada, yada, yada. I don't want to go on too much, but it's good to be back. Loud and clear, good. So a lot's happened. So I'll give you a short story real quick. So my wife and I, we were going for our weekly checkup because she was going to be due this week. And the baby was breached, transverse breach, 37 weeks. So there was no way of having a natural birth. So we had to go every single week to make sure everything was okay, check on her, see if maybe they would have to induce labor, and not induce labor, but go ahead with a cesarean section. So we were at the doctor's office on the 22nd, and her blood pressure was a little high. And for those of you that are not familiar with a breech baby, it's when the head is upwards and the butt and feet are downwards. Our baby was actually somewhat sideways. So there's no way for a child after a certain age, certain size, you know, after its head is developed to flip and then come out of the birth canal naturally. So they have to go in there and cut her out. So we were at the doctor's office and doing routine check. And he goes, your blood pressure's a little high. I'm going to come back in the office. And if it's still high, it's over. That's what he said. He said it's over. And I'm like, what the fuck is he talking about? And then I put 2 and 2 together, and he said, we're going to go right now. So our doctor lives actually a mile away from the hospital. So we headed over to the hospital, and out she came. And it was, yeah, we were in there for 3 nights. I spent Christmas in the hospital, laying on a cot, nice little private room. But my wife had a good amount of blood loss. She required 2 blood transfusions and some extra work just because, yeah, there was a little bit of complications. But she's good, and the baby is perfect. And yeah, it's a beautiful thing. But now we're back, and I'm going to get back to consistently streaming. I got a few things that I'm going to be coming out with probably within the next month, some changes. And I think this has to do with having a daughter now. A little bit, again, like I said, a little bit more aligned, trimming the fat, and yeah, just taking some next steps and doing things a little bit differently. So one of those things is going to be the streams. I'm not really going to post them. I want to spend less time on Twitter. So I want to spend less time on Twitter, more time in the Discord community. For those of you who are not familiar with the community, the link is on my Twitter page, and I'm only going to be posting the streams in the community. So I'm going to try to be posting less on Twitter. It is a good thing, but it is also a distraction, and there's just a lot of energy on there that I don't want in my life. And I want to be aligned and around people that are interested in what I'm talking about, what I'm interested in. And that just, by having a community that is geared towards markets and trading, obviously you kind of take out some of the riffraff that you might find randomly, your reply guys and your negativity found on Twitter. So it's a little bit more filtered, right? But anyway, yeah, I'm going to be posting the links in the Discord only moving forward. All right, so we're taking the Discord public, or we're taking it private. That's the way we'll put it. We're taking the streams private. And yeah, I don't want to announce too much right now. I'm just glad to be back. How are you guys doing? See some people in the chat, some familiar faces. We'll get right into it in a second. I just said a lot, so. Dark mode. Sorry, no dark mode. Turn your, I'm not going to put it on dark mode right now. I'll consider dark mode for nighttime streams if I do them moving forward. All right. So let's, I think that's it. Let's get started. Real quick, I mentioned this during the, I think I mentioned this during the last stream. Again, it's been a while. The link is below. So you'll see partnered with Trade Phemex. Been partnered with Phemex now for a really long time. I've been talking the last few streams about, something coming out as a new bonus structure. And I didn't know exactly how much it was going to be. I actually thought it was going to be a little bit more. I think I thought it was going to be like 7,000 or something like that. But now if you go to Phemex, if you sign up using that link below, not only will you get 10% off your trading fees, but you'll also get access to the $6,000 sign up bonus. So go ahead and check out the exchange. It's no KYC still. If you do KYC, you get a higher withdrawal limit. Right now for no KYC, you're still entitled to up to a $50,000 daily withdrawal limit. So that's phenomenal considering there's only a few exchanges out there where you could trade all of the alts and be able to still, practice that crypto core ethos of being anonymous and, not fully KYCing. If you want a KYC, by all means, go ahead and KYC. From someone who's had a traditional trading background, obviously not only professionally, but trading legacy markets, KYC was always a part of my life. Every little detail about my life was known when it comes to tax returns, all of that was required to actually have access to platforms. So coming to crypto, it's obviously a little bit different, but most people kind of have that expectation moving forward that it should be like that. I'm used to the way things used to be, but yeah, I get it. No KYC is, there's an added benefit for some people. All right. So that link is below. Obviously, all exchanges right now suffering in terms of liquidity, volumes down. We've seen an improvement across the board recently. Some bounces across the board, some signs of life, short squeezes. Doesn't take a whole lot to get the market to move up after you've dropped, 80 to 90%. But let's get into it. All right. So formalities are aside, I think, right? Got all them out. Not formalities. I gave you the whole story in the beginning about the baby. None of this is obviously financial advice, strictly for entertainment purposes only. And I mean that. Don't take what I say here and go immediately open trades based on, what I'm doing. I'm going to be turning the Discord into more something like that. And I don't mean where I give you trades and I expect you to take them, but I'm going to be making my trades available. So my trades will be available. My ideas will be available. Those will be private. And then also the trading performance will be available as well. So I don't want you to follow me, but I do want you to see that the things I talk about are things that I'm actually implementing and trading. I think there's a little bit of a disconnect there, and I hate, I don't want to just be every other streamer. You share an idea, and then, you pat yourself on the back if it went well. you know, you don't say anything if it didn't go well, and you have no record of whether or not you took the trade. But like a week later, everyone acts like the trade that went well they took, and the trade that didn't go well, we'll just hope everyone forgets that. So I do want some accountability on my part. So I'm going to be making sure that I am way more transparent with that. And again, that's going to be in the Discord as well. Ideally, you guys benefit from that, but again, I don't want you to just follow me. There will be obviously a level of lag between when I post those things and when the trade is actually transpiring. Okay. All right, let's get into it. So a couple things, catching up. Listen, I got to catch up, honestly. Like Monday, I didn't do much. First day back, observing the market. Traditional markets didn't open up again until Tuesday. Obviously, crypto markets 24/7. But my first day back, first day home, I took a look at the market, but I wasn't trading or anything like that. You never want to jump right back into things. Like if you're trading flow, if you're trading, price action, if you're trading lower time frames, there's a certain cadence, there's a certain rhythm, there's a certain feel, right? And that's going to change from one week to the next. Now, sometimes that might continue for prolonged periods of time, but there are going to be periods where there's drastic changes between, maybe 1 week to the next. Ideally, it's not going to change that much, but things will be different if you haven't been trading and you come back after a little bit of a hiatus. So it's stupid to jump right back in, right? I mean, you should have an understanding of how your market trades, right? You should have an understanding of how your market trades around opens, around weekly opens, daily opens, time of day, day of week. You should have an understanding of all those things, but there are going to be times when there's, a little bit more nuance and there is something different within the flow. And if you're gone, what do you know? So I like to come back, just basically go into reconnaissance mode, observation. That's it. Started trading again Tuesday. Haven't had a loss in crypto. Didn't have a loss in trading index futures until later on today. Had 10 trades. So now I have more than 10 in crypto. I'm thinking about the last post. Trading really well, but trading. So this is my little bit of advice that I think is not dangerous financial advice, but I guess it would qualify as financially related advice. Don't fuck up in the beginning of the year. All right. Your path dependence is really important. So the beginning of the year, this is how I operate. I want to be slow and steady. I want to be a bricklayer, right? I want to hit base hits. I've used that term before. I don't know why everyone chooses baseball, but it's the easiest analogy, I guess. But I'm looking for base hits. I'm looking to get my reps in, right? To gain confidence, slow and steady growth, get that equity curve sloping nicely up and to the right. Before I do anything that, might be a little bit more risky, which is obviously you shouldn't be arbitrary with how you take risk and how you assign risk and how you position size and all of that. But I think you just want to start off slow and steady. That's the best way I could put it. Slow and steady. Because if you just kind of come out of the gate swinging, right? Bell rings and you're swinging right away. And you're not kind of feeling things out. Taking a big loss in the first couple of days, in the first week, in the first month, that could be really painful. And that could really hurt your confidence, your psychology moving forward. And you got to dig yourself out of that, right? So we're all familiar with the drawdown to gain that you need to, you've seen the chart, if you draw down 50%, you got to make back 100%. So you have to consider that, right? Geometric versus arithmetic returns, or geometric versus arithmetic returns, right? So if you take a loss in the beginning, you're going to be digging yourself out of that hole at the start of the year, and that never feels good. You want to start by having some wind in your sails, having some confidence, and a lot of the times that means actually just getting your reps. It might not even be that you're cranking in returns or capturing a lot of upside, but you're just kind of, how would I say, swinging well, right? You're even something like getting your hand-eye coordination, your feel back, like all those things. And actually, no, that only applies really to taking a break. But you're starting off the year well, right? Okay. So enough of the garbage. What things are affecting our markets right now? Well, let's see. It's the beginning of the month, so you have year beginning flows. You have beginning of the month flows. You have everything really lined up right now. Again, beginning of the quarter, first quarter, beginning of the year, beginning of the month, first week. Generally returns first 2 days back are positive, but there's really not much you can extrapolate beyond that. This month is, and I'm going to mention what's important for TradFi as is important for crypto because the markets are still correlated. This month is pretty heavy. We had PMI or PPI. Which one did we have today? Today was Wednesday. We had, that was PMI, so ISM manufacturing. We had JOLTS, job openings. We have CPI. We had Fed minutes come out today. We have non-farm payroll coming up. We have Apple earnings coming up. All things that are very important for the market. I would say probably the most important thing for the market is those Apple earnings. Apple is, I think Apple now is a little bit of a change. Apple was Apple like 7% of the index? Hold on one second. Apple was 7% of the index. Now it's probably around 5. Hold on. So Apple's probably around 5. It's closer to Microsoft now. That's all I know. So the weighting of Apple is 5.8. I think it was 7.6. Now we have a different weighting across the board in that basket, in that index, all the components rather. And Microsoft 5.5. So those are equal. Those are the two largest components of the S&P. What's good for Apple is good for the S&P. What's bad for Apple is bad for the S&P. You could basically consider Amazon, Apple, Google, all the mega caps as being very important. But obviously number 1, number 2, number 3 are going to be, they're going to take priority. So we have earnings on the 26th or the 27th. If those are shockingly poor, watch out, right? If those are really good, well, that's great, right? So it's exactly what the bulls want to see. The point is that will have a significant impact on the index, right? Any surprises, not things that are meeting expectations, but that'll have a significant impact on the index, and that will translate to crypto. That'll translate to BTC and ETH. The correlation abates small periods of time, but for the most part, that correlation coefficient is still high. And today, Microsoft down 4%. The index did decently, but it was down because UBS downgraded it. So it's not like it was an earnings release. All right, so there's a couple things, obviously, or more than a couple things that are going to be important this month. Today, Fed minutes. No members, right? Again, this is from December, but this is a minutes released today. No members see any rate cuts in 2023, right? Despite what the market is pricing in. Okay. So, you could be the one to like overthink this and think, the Fed said one thing at the beginning of 2022 and look how they changed since then. And, don't take them at their word. Well, whatever. Okay. I'm still trusting the Fed, honestly. I don't like to try to be too smart in this market. Right? Just don't fade the Fed still. It's not an accommodative policy still. I've said this so many times before. When they change their stance, you'll have enough time to get into the new trend. You'll still have people taking the other side. But listen, they're still hawkish. The market is pricing things in differently, but they're doing their best to reinforce that they don't like any kind of stock market rally, bond rally. These will all undermine their whole goal. So this is not what they want. So they have to kind of reinforce that hawkish tone. But we'll see, right? We'll see at the next FOMC meeting, what that hike is, 25 basis points. That's probably highly favored right now. But this, again, market is kind of leaning on this, whether or not we go into a recession or not. That is kind of front and center, a little bit more than inflation, because I think it's clear that inflation has peaked. But I think if you're going to say, hey, dude, gun to your head, make a high time frame projection or prediction, what do you think would happen? I don't want to do this. And it's not something that I really care to do, because it's like mental masturbation to make long-term prediction. It's, again, if it doesn't come out, then no one fucking remembers this video. If it doesn't work out that way, if it does, then, someone's going to retweet their tweet until everyone is aware that they've said something smart a year ago. But what I would say is, like, inflation comes down, and that's probably not it. I would say that there's an aftershock, because when inflation does come down, yes, risk will rally, market will respond positively, and then we're just going to get back to square one. I don't think that this is going to be this easy battle like that. Like one peak, we're down, we're done, and back to smooth sailing. Okay, let's look at we got all that out of the way. Real quick, there was a lot of alts popping across the board. So Solana was grossly negative funding. That's really come down. So I'd be careful. You know, it looked like there was a good amount of top longing. That at one point was 89 basis points, that funding. You know, a good amount of open interest squeezed off of the lows. Keep in mind, like if you're looking at funding calculations for alts and you're seeing alts that are, you know, funding is grossly negative or disproportionately negative compared to previous readings, and you think, oh, that's an outlier, like, this is clearly like an awesome opportunity to get long. Context and environment, the microstructure, rather, just conditions wise, are not the same as any kind of other previous extreme, because in this case, we're actually at our conditions are much more illiquid than any other time in the last 2 years. So what that means is it's harder to keep those markets in line, period. So obviously the funding mechanism, right? That is an incentive mechanism the funding mechanism is the funding mechanism is an incentive mechanism to keep the spot and the futures market in line, right? Longs pay shorts, shorts pay longs, right? You know, you're incentivizing someone to take the other side of the trade, someone to close out the trade again to keep those markets in line. Well, it's a lot easier to do that when you have thick markets. When you have derivatives that are thinner, you know, and you have the spot market and the derivative market, you know, they're going to be a lot more disconnected. And that's why I always said, like, you could kind of look at, even though it's like there's one Bitcoin, there's one Ethereum, they're all trading on different exchanges, right? Or those products are packaged on different exchanges. It's kind of like they're different products because they're not like trading the ES or crude oil through the CME or, you know, trading the NASDAQ in the centralized one single clearing entity. These are all on different exchanges being, you know, there's different market makers across different exchanges. You don't have like designated market makers. It's not one product. So they're all kind of different products. So they're all going to be, it's going to be tough to keep them in line. I guess that's the best way to put it. I'm kind of having diarrhea of the mouth right now. But I would just be careful looking at that and thinking, oh, very negative funding, got to get long. Well, the trend has been really strong to the downside, and the popular sort of, you know, the dominant trade has been down to be a seller. So you're going to see more negative readings than positive readings. All right. Let's take a look at, I think I covered, we'll get into charts because I have a tendency to go a little bit too long at the beginning. All right, so ES. Again, I don't have like a strongest read on everything right now. I can't sit here and LARP. If I take a couple days off, I'm kind of in the weeds. But the first couple things I notice, you know, I've taken a few trades in the last 2 days, just low time frame stuff. But what I notice right now, it's kind of what's obvious to everybody at this point. We have 2 back-to-back weeks. We have an inside week, so we have a good amount of compression. So I've tried to make that as obvious as possible. WWDD. It's just very easy for me to see whether I'm looking at a level that's derived from a daily or a weekly. So this week's high, this week's low. The following week, the week of December 27th, inside of that entire week, you know, there's a lot of structural setups you could take in crypto based on this, but for the most part, we're just looking at price that is compressing, right? Now, obviously, there's a big change now that this is a new year, but for all intents and purposes, I'm probably just going to treat this the same way, right? So looking for either a sustained move through the high or through the low to get behind something that it kind of probes or gains acceptance through those levels. But you have a weekly inside structure. You have a daily inside structure as well, more locally. So in this case, you know, the high of January 3rd, this candle just closed. High of January 3rd, low of January 3rd, and the candle that just closed, today's candle, today's session, inside of that entire structure. So from a candlestick standpoint, like the most crude method, right, for data points, this is balanced, right? And if you looked at the ES today, I was trading the ES all morning, very balanced, right? Very balanced, as you know, pretty Gaussian when it comes to how price had distributed. We had one, if you look at like a 30-minute opening range, we explored the top side, broke out of that, fell back within the range, probed the downside, took out a significant low. We're kind of forced into a puke point and then rotated back within there and didn't really do much outside of that. But we have these two, I guess, triggers that would normally be used for some kind of breakout traders, and they are within close proximity of each other. And it's not really saying much other than, well, yeah, we've been pinned. And, if you follow along, there's some posting about, JPM putting a collar on and keeping prices pinned and needing to sell, 20,000 lots of ES if we broke, 39 and needing to buy if we broke 37.50 or whatever it was, 38. I can't remember. And keeping prices pinned. The benefit of this, without even thinking too much of why, or, who's doing it or why price is doing this, the benefit of this is it's really laid out. Like, it's really clear that price has been stuck within a range. The norm is to rotate within this range. A change would be for us to finally accept outside of, for example, 39.20 or accept through 37.88. It's kind of like smack in the face obvious at that point. Now, locally, for the ES at least, the high of this structure where we've rotated off of significantly now twice, this rejection is the low of this range that we were within for a couple weeks. And this is where I said we had a market structure break and where I was starting to get bearish. Price rotated a lot higher than I expected, but we ended up breaking down below again. So the reclaim of like 39, let's right around 39.30. I think that's the last stream I said 39.30. So I'm going to act like I remember. Right around 39.30, a reclaim back within that level. So a break outside of this weekly balance. Again, we have an inside daily structure as well. A sustained move through 39.30 sets us up back within this prior composite. So, it's a carve out, right? Take this structure, it's balanced. Just imagine it like this, right? There's two ledges on the opposite side. An object is trying to roll into that. It needs a little bit of energy to get over that ledge. And if it does, it's probably going to fall back into the same behavior that it was prior because it's pretty accommodative. And at that point, there's not a whole lot that steps in the way of it. So if we break, into 39, and I would open up Sierra right now, but I'm just going to stick to this. If we break back within 39, you're looking at a composite that's right around 39.30, 39.24, whatever. You got a POC, so most of the volume being done around 39.67, and then the high of that value around 4,030. So a decent range to carve back out. I think more likely if we did re-accept back within the structure. So if we're starting to treat the top side of this prior range low, or the top side of this range, right? Multi-day range, as balanced as you're going to get. If we have a break from balance that takes us up and through this level and we start trading back in these lows, I think that you're probably going to see a pretty good move up to, I want to say you could take for granted a move back up to 40,040. So looking at, again, a move to mid-range to possibly manage a trade and then a move back ultimately to the highs. I think it'd just be a good sign of strength. My opinions don't matter, though, so who cares what I think? I mean, price is going to do whatever it wants to do. Real quick, this is not something that I would say necessarily applies as cleanly to the ES as it might to something as like a crypto or BTC. But if you do get that break back within this level and then we lose it, for me, for something like I mentioned BNB today or even BTC, it's the same thing. This just really sets up a short bias for me. This level being retaken outside of, again, I should clarify this. You have a significant area of balance being established, very clear extremes. A force through that level and a failure, it sets up an easy, I want to stress, it sets up an easy move back down. The same way that a force through to the downside and a reacceptance sets up an easy move back up versus it's almost like, I guess the best way I could put it, versus just doing this and this being easy, or just doing this and this being easy. It's almost easier for this to happen and then that, and then this to happen and then that. And I guess the best way to describe this is, and again, this concept's a little bit more applicable to crypto. Imagine you're one of, everyone is getting involved right here. You got your stops at the high, you got your stops at the low, you have your OCO orders. So when you take out short stops up here, right? So you blow out shorts, that buying power is no longer there if the market rotates back down. And then if you break up above a key level like that and you trigger any kind of manual longs or breakout longs, the stop placement gets placed right back within this area as well. So my point was, a break outside of a range sets up an easier move back through if it fails, because you suddenly remove the pressure that would normally be there, right? Stop out shorts at the high. A short is a future buyer, right? So you've taken away buying pressure and you've opened up more selling pressure on the reacceptance back within, right? As they maybe re-add or recommit if we break back down below where they're stopped out. And then if you have longs that are stopped out, right? Or if you have, longs that are triggered at the break of this level, the reacceptance back within there is often the invalidation. So it just helps speed things up. That's the best way I could put, that's the best way I could describe why it is a little bit easier for something like this to happen versus just cleanly breaking and continuing, right? Like it would in a textbook, which is always what you're going to see, right? Oh, this is a range. We're just looking for this. It's like, well, yeah, how many times does that ever happen? It's almost that it never happens that way, unless it's a really fast moving market. All right, so key levels for the S&P, really well defined. I think I honestly would play a break of this inside day structure. Intraday, like I said, we were really balanced. I mean, this is just go back to the open. Well, excuse me. Let me set something real quick. Actually, you know what's easier to do? Yeah, so you get an idea of this session being pretty balanced. All right. BTC. Let's see. Inside month, inside week. Or first, let me just mention, I tweeted about this the other day. I don't really care too much for levels like yearly or quarterly opens for crypto. I mean, levels matter in crypto as long as a lot of people are focusing on it. So that's why your most popular levels, they often give you decent responses, at least that are predictable in the short term, because you got a lot of people manually acting on them. The further out you go, the more obscure you go, the less actionable I think they are. But when it comes to yearly opens, I pay attention when we are really close to the open and you don't have, like, when the low or the high is really close to the open. So the best way I could put it is, I mean, there's no shadow, right? There is, right? There's technically, this market, probed down to whatever that is. It's like a $60 difference or $100 difference, but there's really no wick, right? There's really no probing of the other side of that structure. I mean, do we think that in these conditions that this is done and Bitcoin is just going to one time frame from the open of this yearly structure and continue upward? That would be like, that'd be ridiculous, right? Not impossible, but it's just not on, it's not in the range of possibilities that I assume are likely. So this is not like a trade that's a gimmick, a gimme. It's not a gimmick either. It doesn't mean like just open up a short now, right? If we look at, let me just put a line on it. So here's the open. It doesn't mean you could just open up a short, right? Because we could spend a good amount of time away from this level. But this yearly open is right around where a good amount of liquidity would be. So odds are that we, in my opinion, that we revisit this. And I would say we revisit it sooner than later. And I mean, if anything, you're more likely to revisit in the first quarter. Sort of like, weekly opens, Monday opens, or weekly closes, so Monday open. Very likely that you're going to see the market return back to the Monday open within the 24 to 48 hours after. So again, it doesn't mean like it's as easy as if the market moves up from the Monday open that you get to just short anywhere, right? Or that if it moves down, you just get the long anywhere. You have to actually define a setup. And if anything, it gives you a potential target, right? So if you see a setup manifesting, where we have no wick, we're really close to the open, price has been one time framing, and then you've seen a loss of momentum, maybe signs of absorption. Even better if there's imbalances on the way up and price hasn't really built a structure. Well, then upon failure, a lot of the times, forget any kind of other, structural level. I'm immediately going to target that Monday open, or in this case, what I'm saying is the yearly open. So that is something that stands out. I mean, these lows right here, where does the market need to go to get people involved? I think that it's pretty obvious that the market spent a good amount of time in this area. You had one serious response here, but again, keep everything in perspective. Nothing's been happening so much to the point of a small move suddenly is considered a big move because it's all relative, right? But where does the market need to go to get a lot of people involved? Well, I can imagine all these lows uninterrupted would be a problem if the market came back down through. So you'd get one of those kind of cascading moves, right? Where the market grinds up for a few days, gets people bullish. It doesn't take much to tip the market back in the opposite direction because it hasn't really built any kind of significant structure. Versus like breaking outside of here, forming a balance above this level, establishing structure here, and then continuing to make structure upward. Right now we're just into an extreme. We're into what is like a local range high. So that stands out. We have, by all measures, high time frame. You have a lot of compression. So we have, break outside of multi-month range. I don't really care for the monthly too much, but it seems relevant right now because of how tight things are. It's just more of a sign that like this is probably I don't know how much longer we're going to have this amount of compression and know this breakout is not the breakout. But we have an inside monthly structure right here. Inside weekly structure as well. For the most part, we just broke that high, but that's not a real like commitment through the level. I mean, if you look at the last couple of weeks, same idea with the ES. I mean, this is just compression, right? Again, I look at TPO charts and distributions to get a more clean idea of balance, but this is balance from a candlestick standpoint, right? Things are tight. So committing through 17, committing through 16.2, 16.27. Those are things that you want to look for a change in behavior to occur through, right? Because again, the market has been pretty cornered, and it's not cornered, but it's been isolated within this region now for quite some time, and you're going to put 3 weeks worth of positioning off sides if you end up committing through the level, right? Someone's going to be wrong, right? And we know that their positioning is pretty local. So high time frame levels, we have those that stand out. This is all so tight down here, but real quick, that weekly, so that is the weekly level right there, kind of opens up into an area of inactivity. I mean, this was a one time framing move down, strong trending move down. It's not like we established really that much structure within it. I mean, you have this little HVN high volume node right there. But the idea is acceptance back above 17. So back above this high, no fake out. And we still have a ways to get there. So I'm not calling it early because this could easily just roll from here. Acceptance through 17. So a sign of strength through there, right? So sellers coming in, being snuffed. No immediate loss of momentum, right? Buyers getting aggressive. Acceptance through that level, opens up kind of a vacuum up to 17.4. And it sounds like, we're talking about these moves and they're like $300-$400 moves. I mean, it's not, that's good, but I would normally say that was good, right? At higher prices when conditions were a little bit, the market was a little bit thicker. But now, you have to consider your trading fees a little bit more because the market is thinner and everyone's going to be more transaction cost sensitive. But again, break outside of that 17 level, and my apologies for not being specific, 17.4, 17, 100 region. I don't really care too much for an exact level because again, there's different BTC prices everywhere, but the idea is this is a zone to really see where the change, if change is going to occur, it'll be in this region, right? Sometimes it'll tick perfectly like a, you know, a treasury, but sometimes it'll trade like the NASDAQ and it'll be messy all over the place. So acceptance through here, not much that gets in the way of us, right? So it's pretty decent trip to 18K. But mindful of, like I just said, these kind of failures, they really tip the market on one side, right? You really need the market to get behind this move. Otherwise, again, you stop out shorts, right? So you take those future buyers out. Market reverses back in this direction. You know, then you have any kind of top longer, their stops being hit. You have all this uninterrupted price action on the way up, and it just sets up. It sets up that kind of like we do this for a week plus, and then suddenly pop up and then rip down. Okay, one sec. I'll take a look at the chat in a second because I haven't really paid attention to that. So BTC real quick, the level's gone, but we're just trading back within a prior composite. So we had a very balanced period of price action from the 20th of December. This is not necessarily balanced. It's a lot of dispersion right here, but you can see 16.9 and, you know, 16.7.5, 16, yeah, what is that? 16.7.7, right? Kind of just right here. So area of balance, so you'd form a composite there. You have plenty of value overlap. There's a lot of agreement here. Then you have another area of balance down here. Got the break out through this area of balance, accepted back within a prior area of balance, and you just look at sort of the same idea I was talking about with the ES, right? Talking about accepting back within a balanced region or an area of balance, a composite, and you know, immediately targeting the high. So trading back within there now, I mean, we have some excess at this high right now. We didn't take out this high, right? But there is this, you know, pretty decent sign of rejection so far. So, you know, market's spending most of the time down here. Didn't really get to spend much time up there. So it's pretty swift response. Yeah, this, you know, I don't want to short this too early, but it can kind of go both ways. I mean, I hate to say that. I would personally rather see, so for example, again, like I just said, you know, if we look at like the 4 hour, you have an, this is too tight right now. You look at the 4 hour chart or something like, yeah, the 4 hour chart's a good example. You have a good amount of balance, right? And I know not everyone uses a TPO, so you don't need to look at a 4 hour chart. You can just look at, you know, this profile. But committing back below these lows, I think that probably would do it. I mean, this right now is a decent amount of rejection from what was an imbalanced region. So I mentioned this morning in the Discord. So we had a profile that when it was in progress, until this excess, it looked like this. So this was, the day was in progress, the profile already looked like this. And intraday, we had the move up that took us into here. And you had something like that. And it was already looking like that. And my point was, it's very rare for you to have this kind of, a profile over a period of days that forms and leaves something like that. So leaves like a P. You know, you got, let's say you got a bunch of delta up here that's positive and a lot of buyers. The loss of that usually leads to an unwind, right? Because you're moving away from all that positioning that came in. But that's when you have positioning accrue over time and build up. Intraday, just a single session. If you have something clean like this, so a P-shaped profile, and you're rotating for the first time back down to the value area low, right? Or back down to those single prints, it's a very high probability long at that point. And it's for a scalp, right? So ultimately it's a move back to, I'll show you what I posted in the Discord. I don't know why I'm just, the profile was still in that shape at that point, so I'll pull it up. One sec. Here we go. So now you can see. So this was the profile earlier. All right, my point was this was the first rotation back down to the low. Right? So first rotation back down to the value area low, back down to those single prints. So first revisit back to that imbalance. And you're normally going to get a response there. And you'll get a response and get a move that'll take you from the low of value back up to at least a POC. You know, prices Fair value is at the POC, you know, most agreeable price. You're usually going to see price kind of spend more time around there. And if it's the first move back to imbalance, probably going to rotate back there after that. Now, if we continue to build this sideways and we have like an inside day again, inside value, and then we start accepting lower, well, maybe momentum died. You had your rejection up here. And now that positioning that's getting involved here is suddenly going to be offsides, and we know there's more of it. So at that point, then yeah, I think you don't get maybe the whole move to the top, the high, and you get something that breaks down here and revisits one of these lows. And I think, like I said, you know, that yearly open just has a bullseye on it. But I mean, we're back, we're within value right now. We opened up within value. It's more than likely after you have a move like this that you have at least one day of, you know, of balance prior. So meaning, you know, if you're a betting man, which you probably are, how is this day going to finish today, which just started, which, you know, it's kind of like a futile thing to do to predict how the day is going to unfold, obviously, for obvious reasons. But, you know, more than likely after one big day up like this, after a trend day, you have at least one day of balance, right? You know, I used to have the stats for the bull market, which was like 3 to 4 days of balance before continuation. But, you know, you're more than likely going to spend some time within this value area. Now, because of that, if you start, you know, if we're cleanly defining this region and we spend most of the time between, you know, still around yesterday's value, you see one side got a little bit more aggressive than the other. If you're looking at delta, whether it's negative or positive, open interest has gone up in favor of one or the other. Then, yeah, after you've had one day or 2 days back to back and you start reaccepting through those extremes, well, then that's probably your continuation or breakdown play. So, you know, at this point, trading sideways and then reaccepting above, you know, for example, that kind of lines up 16,885. Yeah, if you look at even just the 4-hour structure, what that implies is the move that breaks through here probably at least targets this high, but then, yeah, that's possibly your continuation move. Real quick, though, because high time frame wise, not high time frame, but one sec. I mean, OI is coming off on this move. Now, this has been on mostly positive funding. As the market's gone up, we've had some squeezes, some drops in OI, but there's no real like sign of derivative fading up here, right? So I think this possibly is one that might lose momentum and just roll over. And again, it helps to have that bias based on the yearly open kind of just being clean like that and having no real pro below. You know, you have, I think, more aggressiveness in the derivative market than the spot market for this move. You don't have any kind of buildup in OI, you know, on the short side, you know, fading this at least. And yeah, nothing, I mean, just trying to see. No, it looks like it's probably a little bit more derivative activity up here, if anything. One sec. Where'd we go? All right, let me check the chat and then I'll look at some alts, take some questions. Just want to make sure I didn't miss anything. Is there something I wanted to talk about? Is the problem with riffing? Need a script. No, I think that. Now, let's just talk about real quick, actually. The ramifications of a move through the range are different from one extreme to the other. So a move through here, I'm not looking that far, right? I mean, you're still looking at, we're still, like, for example, all this is taking place below a much more significant range. So, you know, still resistance, and acceptance back within this structure, right? That POC, as I said a couple streams ago, is still there, still 19,100 region. Back within this range, you have a much larger, literally, range of prices to trade within. This is still resistance right now. Yeah, a ton of compression, things are dead. But this is really tight, and I don't want to write off this expanding much more to the downside. I mean, that's one of the most dangerous things to do. That we've had this kind of like this price kind of like what do I want to say? It like rocks you to sleep, makes you kind of complacent. I'll let you walk in, right? You've had the sideways price action. It looks like it's bottoming. You know, I think the market is bottoming, but let's not forget what happened back here, right? It's entirely possible that, and I guess the best way to put it is because things are so tight down here, and how I said that this move I anticipate less follow through from a move like this than a move like this. I mean, if you end up spilling through these lows again, then I mean, where are we looking? Because this thing is, let me get rid of those levels real quick. This thing is tight, right? So a breakthrough here, I gotta say, just from a technical standpoint, 13, 12, 10. I mean, if this was a 5-minute chart and you said, hey, where are we going? And we weren't stopping here, I mean, that makes sense. So I wouldn't want to write that off. Don't get too swept up in the energy on the timeline. Yeah. All right, let me look at the chat. Okay. Let's see. See if I can just pop out the chat. No, actually, it's hooked up to my no. Dark mode, please. I will consider dark mode in the future. Thank you for all the congratulations. Okay. First time here. Happy to have you, man. Thanks for joining. Thank you for all the congratulations, everybody. Really. What's up, Don? Yeah, so there's like, that's the thing, Don. There's a lot of things that I just don't consider because I don't know. The macro is really, it's everything, right? It's the game with the most moving parts. It's the most compelling one to play after you've traded for a long time because, you know, it is the game on expert mode, but there's just way too much to consider. And I don't even want to act like I have a really strong grasp on how everything in the economy works. And yeah, so when it comes to housing, the auto loans risk that has now been talked about recently, these things have downstream effects. And it's just, we're in an environment right now where you have to be, you know, everything's really sensitive. Bank strong today, but some prime auto is at risk. Nothing matters than a move out of the range more than a. Yeah, it's almost like the a lot of, if I mean, my feel based on my following is that everyone's taking for granted a move up. I don't know. I still kind of have the feeling that things don't get better until mid-year. Q2 is what I said. And I don't know. I think that we're still chomping at the bit to people are chomping at the bit, myself included. Like, I like markets when they go up, are looking for the easy long again. And I think it's just markets are the only place where people don't really learn from mistakes in history and continue to make the same mistakes. And yeah, nothing has really changed. The Fed continues to push the same approach. So I don't know. A couple of people were saying the beginning of this year would lead to, some easy longs. I just don't see that. That's just not how it works. It's like, oh, thank God the year's over. Now we could all just, it's easy mode on. It's just, that's not how it works, right? I mean, historically, I think, like I said, the first 2 days of the year have positive returns. But I forgot. I shared something a while back. First 2 months, I think I forgot what I have to. I don't want to. I don't want to try to recall from memory because I forgot if it was with relation to BTC. But either way, my interpretation was that you don't want to be heavy in risk in the first 2 months of the year. I don't know. Forgot how I arrived to that conclusion, but however I did, it's still keeping me conservative. Time-based. I use time and volume-based composites because time is going to show you the market structure. Volume is going to show you where actually activity came in. And also to see if there's any major discrepancies. Like where you have major discrepancies is if you, I don't know why we're on this screen. If you look at something like the NASDAQ or the ES, and you look at a time profile, so a TPO or market profile, and then you look at the volume profile that corresponds to it, and you'll see, you know, for example, maybe like in the ES, you know, you have a profile that has, maybe it has like a ton of excess at the low, right? But if you look at the volume profile, it's really nothing that took place up here. And then meanwhile, you had a significant uptick in volume in that excess, and you don't have excess in the volume profile. So you could see, oh, there's a good amount of volume was transacted there. It doesn't show up here. You know, certain trap setups, certain setups that might be worth fading. More specifically, we'll just go over what I talked about the last couple of weeks, which is when you have like a TPO chart. Let's say you have a double distribution, and then the volume profile, wherever it is within here, has like a crazy pickup in volume, and it's usually an iceberg, right? And maybe it's defending that level, or, you know, maybe if the market it's up here, it's defending this level, and you'll see there's a big discrepancy between the volume profile and the TPO and the market profile. And, you know, the whole concept is, you know, volume should confirm price, and you want to see that you know, there's no real anomalies between them. But it's not as easy as saying, oh, if you have an anomaly, then you do this exactly. But, you know, it's prescriptive, or it's like, you know, you have like a recipe for a setup. No, it's okay. Now it's like, I got to pay attention to this. For me in particular, when I see something that stands out in the volume profile, and it's usually going to be some lack of excess that's on the TPO profile, or it's going to be a big one level that trades a ton because there's an iceberg. Well, most icebergs that I see, I fade, because almost all the time in the short term, that person might be filling a position, getting out of a position. If it's a big player, they don't have like high time preference. They don't really care where price is going to be in the next 5 minutes. If they're trading 500 million worth of the ES, but the chances are the price is going to, you know, so the point is price is likely going to probe the other side of that for some points. And it's not just going to turn at that level. If it was that easy, we would all just get involved at icebergs, and the market would be easy longs or shorts from those levels. But here I am saying that the opposite direction is easy when you fade it. It's just, in my experience, it's worked out, right? I only take it for a few points. What order flow tools? So when I'm looking at acceptance, I'm looking at whether or not there's a pickup in volume, whether there's a pickup in open interest. And I look at a footprint, honestly, and I want to see if that level is actually taking a beating. So if, you know, for example, we have a major contextual level that, and it could be any level that you're determining to be important for your setups. Could be an intraday level. It could be yesterday's high, yesterday's low. It could be yesterday's value area high, value area low. It could be, what else could it be? You know, a pivot. It doesn't matter. Point is, it's a level you're focused on where you want to start paying attention. When I say, like, for example, when market breaks above a level, I'm looking for acceptance. I want to see that actually there's a bunch of selling that comes in, right? I want to see the level has actually done something. So, you know, market trades back to the level. You get a bunch of selling at the level. And then for me, on the low time frame, one of the clear signs of acceptance is, in this case, in a market that's moving up, or had been moving up, is when it's just building on volume, right? So market moves up, or let's say that, let's say the market has gone up, and as it's gone up, it's been building volume below us. And I know this is going to be, this just looks like a line chart now, but if you're looking at a footprint, here, let me draw the footprint. Let's say market breaks above, here's the level. I'm going to try to make this as good as possible. Market breaks above, right? Trades back. This whole side's filling up with selling. Imagine that's red. Now the market actually trades slightly higher. Next candle wouldn't look like that. But again, more selling coming in, and each time larger amounts of selling are being bid up higher than the previous. So, and it'd be even more obvious if, like, let's say, for example, this had like a negative 100 delta, and then the next candle is higher and has, you know, a negative 120 delta. Meanwhile, it's still bid up here. All that volume is coming in, but now it's below us at the bid still, right? So building up on volume in the case of a long, right? So sellers are hitting the bid, but the bid is remaining firm. The opposite would be if the market breaks above a level and any selling that comes in, even a wimpy amount of selling, brings the market back down. And it's just positioning coming in and the market holding that level. There's a lot of nuance to it. There's a lot of feel to it, honestly. There's a lot of times it doesn't work. There's a lot of times it does. But that when I look at acceptance, a lot of times I'm looking at the actual volume coming into the market on the low time frames. If it's a high time frame move, I'm just, for the most part, looking at presence above the level for a certain amount of time. So if I'm looking at a change in market structure on the daily or the weekly, you don't have to move as fast, right? But you do want to see that the market is able to hold that level for, you know, more than, you're not looking at a 5-minute chart at that point. You're not looking at, I mean, if you are, you're making a mistake. But you're looking at, you know, the market being able to hold it on an hourly basis, you know, on a daily basis. Now, the higher the time frame you go, the more the trade is probably going to be behind you. But, you know, big ships turn slowly, like I said, and you usually have some time to enter into higher time frame trend changes because you still have a bunch of knuckleheads that are going to be betting against it anyway. So perpetual futures are, so your futures market in crypto is responsible for most of the price discovery. So most of the volume is done on futures. They're more liquid than spot markets. They're going to be priced around the spot price of BTC or whatever is the underlying, but because of the leverage and the amount of capital notional that's being used, most of the time those are going to be responsible for most of the movement. At least intraday, lower time frame. And this is why, if a move is real, though, going up or going down, you'll see the spot market getting behind that. But the futures market affects price action, right? I guess the best way, because you wrote, how does the futures market, how does perpetual futures price influence the price of spot? Well, it influences where the market is, right? It's the futures market is, so for example, Binance, the thickest market, the largest market, that's responsible for most of the price discovery. It's not Binance spot market, it's Binance's futures market, because that's where most of the volume is done. Which index? I go back and forth between trading the ES and NQ. You know, you feel like you're confident in something for a couple of days, but it's all it's an illusion. I haven't been doing it long enough again to really say I have, you know, I'm a lot more confident one over the other. I think the ES trades a little bit more cleanly, but yeah, no easy longs. So yeah, all right. So I mean, there's not like a whole lot that I want to go over much further. I mean, I have to actually hop on a call, at night, because they're in Singapore. What else? Oh, BNB. So BNB. So BNB, a couple things. You know, this is still in progress, right? You can't say this is a high or low forming or anything like that. We're still in, like, this is going back to June, right? So we're still within a very high time frame range. But as far as the levels that I indicated today that I was focusing on, just some local levels. So that daily pivot, acceptance through that daily pivot is part of acceptance through this local range. So, you know, strong move down, flag, usually lead to continuation. Pay attention when it doesn't, it leads to reversal. So now we reversed, we're back within inside this structure. This is, more importantly, this is a multi-month composite. So there's a whole lot of confluence in this region. So this breakdown, big picture wise, kind of looks like a deviation if it's the case that we're going to accept back within these lows. Now, we're not technically back within the low of that composite. Like if you form a composite here, I don't think we are. So it's kind of front running that, right? So that level is slightly higher. It's 265. I'm looking at this thinking that there is an immediate trade though between this little area where there was a very imbalanced move down. Now, some of that has to do with the fact that a lot of this move was FUD driven during a period where there was a lot of uncertainty around Binance. And you have to understand that for the longest time, Binance, BTC, Binance, and ETH, those pairs had a pretty predictable relationship, right? And Binance, BNB was always very strong. It got really disconnected because of everything that happened. And I think there's a bit of a return to value in that, right? So a good amount of capital that fled will find its way back in. Doesn't mean we'll see long-term outperformance, but I think that because the, let's say, coast is kind of clear, the market doesn't give a shit at this point. We'll just put it that way because we know how this market has like goldfish memory. I think that because that's not like fresh on everyone's plate, that how am I going to say this? That the worst is kind of over with from that, right? So from that FUD, it doesn't mean this market can't continue down. So I think we see a little bit of return to the mean. And I think that this setup, the break back within this daily level, break outside of this multi, and again, this structure down here is a multi-week range. It was an inside week. This is an inside week break. So balance, break outside of that now. You have 3 days left in the weekly, but this is looking like the first real significant change in the last 2 weeks. And it just happens to trade back, you know, in a region of major importance that lasted from August until now. So the point is, if this area was so contended and so important, then picking one side or the other should lead to a more significant change. You know, accepting below here means something's different. Accepting above here means something different. It also means whoever got involved here, the one side is clearly wrong. So if you do something like that and you don't lead to a big puke, there's not a lot of further liquidations, there's no major decrease in OI after that, no one's getting really hurt, then it's probably not the trade, right? Then you're looking at an imbalance move in the opposite direction because, again, you start clearing out some of the positioning that might stand in the way here, right? So now imagine your longs stopped out here. So they're not sellers in here anymore. And any kind of short is now a buyer back within here. So if you sold this breakdown and this is your invalidation, well, you're a buyer right here. So it just helps kind of things move back in the opposite direction. And now for me, though, I want to use the local level to define it because I don't trust anything in this market right now. This is not a bull market where you could let something go. If it goes against you and you're, you know, being kind of a jerk off, well, maybe I shouldn't look at it for a couple of days and the market will save me. It's not like that. You know, I wouldn't let a position go a couple points past me. I'd rather be stopped out. I'd rather close out and get back in. So what that means is a loss of this low just sets up a trade in the opposite direction, honestly. Break outside of this level, some kind of lower high right around here maybe, and then a breakdown, and then there's nothing here. And then, oh my God, look at all that liquidity. And I kind of think that happens. So the question was, does this happen first? And as long as we're above here, yeah, I'll give it the benefit of the doubt. But the moment we start breaking down and putting in some kind of lower high or just looking slippery, honestly, I mean, what's the reason to hold if you're back in here? No one else will. So, yeah, I think that's it. I just wanted to get back on here, do a stream. I'll take a look at Solana real quick because it's kind of the flavor of the last few days. But again, just be careful because a good amount of that was squeezed out. So yeah, open interest still quite elevated, right? But it's kind of become an obvious trade up here. You can see that funding transition, so that basis began to really compress. At one point, and I was longing this up at the highs. I mean, I was longing it when Binance was still trading. The spot market was trading like 30 cents above the futures market, which is a lot when you're looking at something that's 13 bucks, right? It's a pretty big basis. But now that's that's changed, right? So that's become more in line. There's a little bit more obviousness to this trade. I think if anything, honestly, like if I'm looking at Solana, hold on. Whoops. There we go. I mean, this is one sec. Scaling. Oh, let me pop this open. There we go. I would probably look at something like this, like a halfway move. Whoops, that's not what I want to do. I wouldn't be surprised if we had a pretty deep pullback. Right. You got a good amount of confluence. So the low of this structure on the way down, melted down, reacceptance back within. The low of that is a good amount of, consolidation down here. That's a good amount of what we'll say, like, what's the word I want to use? These late streams, man. Man, being a parent, it's just Navy SEAling it with no sleep. But what the fuck word do I want to use? Excuse my language. I can't even think of the word. It's not at my disposal right now, but it is what is it? Congestion. It's a little congestion down here. That would be kind of where I would expect people to maybe panic sell this, and then maybe us find support before another move. Point is, I sold some spot yesterday. I was public about that. I shared that. I sold some spot up here because of that. Just looked like things were getting a little heated. And I mean, we're right at the level where I'm not really going to be trying to peel off more. If you're up here and your trade entry was down here, like your risk to, future reward is like grossly skewed at that point. So if someone closed you out of the trade, you wouldn't get back in. All right, guys, that's it. I'm shot. I'm shot. So yeah, I've been tracking my sleep because I think I want to get like I quantify the actual lack of sleep I'm getting. Last night she slept. I got 6 hours, 5.5 hours of sleep. I got up at 4:40 today, which is not bad. I like doing that. Yeah, it's like, I remember my parents told me this when I was younger. They're like, you get really tired, but you have so much love that your body adapts. And I get that. Like before this, if I didn't get sleep, I was bitching. I would get like angry, when you're hungry and you get hangry. If I didn't sleep, I'd get like, I don't know, tired, angry. I don't even know how to describe it. Like anxiety about not getting in bed at the time that I wanted to get in bed. But now I'm like, whatever. 4 hours of sleep, that sounds amazing. 2 hours the night before was, that was pretty painful, but you just adapt. And if we didn't adapt, mankind wouldn't have continued. So clearly that's in the mechanics somewhere. All right, guys. Till next time. I don't know exactly. I'm going to be tentative about the next stream because I have to figure out the schedule. And the schedule is, I wake up early with my daughter. I'm probably not going to do the early morning streams because that time is nice. Being a stay-at-home dad's pretty awesome. But, yeah, tentative as to when the next stream is because I haven't really figured out my life yet. my father schedule. So get used to no sleep. I'm down. I'm ready for it. All right, guys. Thanks for joining. Till next time, stay smart. Till a long time.